Hello, good morning and welcome to Business 360. My name is Blyden Ukem. On Business 360 this morning, Iranian President Pezeshkian offers resignation to Supreme Leader Khamenei amid all the concerns happening in the Middle East and how it's affecting the economies. We begin from there. The Iranian Supreme Leader in this direction giving direction to resignation, London-based anti-regime outlet Iranian International reported on Sunday. An anonymous official told Iran International that the letter had called out the fact that the Islamic Revolutionary Guard Corps had effectively taken over large portions of the government and that the president and other high-ranking officials had been cut out of vital decision-making. Pezeshkian, the letter emphasized, was unable to run the government or fulfill his responsibility under the circumstances and as such requested to resign. Anonymous sources told Iran International that the primary source of the differences between Pezeshkian and the head of the IRGC, who is believed to currently hold a lion's share of power in the regime, was the way the war was managed and its destructive consequences on the people's livelihood and the country's economy. Last week, US officials revealed that Khamenei is hidden in a secret location with little access to the outside world, only reachable through the labyrinth of couriers. Even the highest officials in the Iranian government are unaware of his location and are not able to directly contact him, the officials said. Meanwhile, US President Donald Trump says that Iran really wants to make a deal and it will be a good one for the US and those that are with the US. And now looking at perspective from US to Africa. A huge loss for Africa as US secures major rare earth deal in Greenland despite Trump's failed bid to acquire the island. The United States has secured long-term access to one of the world's largest untapped rare earth deposits, a move that could reduce its future dependence on mineral-rich African nations as Washington races to build a critical mineral supply chain independent of China. The United States secured a 15-year deal to access rare earths from Greenland's Tanbreez project, reducing future reliance on Africa and China. Heavy rare earths from Tanbreez, such as dysprosium and terbium, are vital for US defense technologies and are rare outside China. This agreement helps the US meet upcoming Pentagon rules restricting Chinese origin rare earths and counter potential supply risks. Realloy is building a non-Chinese rare earth supply chain in North America, enhancing US defense manufacturing independence. And now in Africa, as China's $6 billion investment turns Africa's largest car-making hub into EV battleground with Europe. China's growing investment in Morocco is turning Africa's largest car-making hub into a key battleground with Europe in the global electric vehicle industry. China is rapidly investing in Morocco, building a massive electric vehicle supply hub, including industrial parks and a $1.3 billion battery gigafactory. European Union policymakers fear that China is using Morocco as a backdoor to bypass heavy EV tariffs by exporting minimally processed part tariff-free to Europe. Meanwhile, a Moroccan official denied the allegations, highlighting strong rules of origin and significant local value addition. The situation creates a dilemma for EU regulators as penalizing Moroccan exports could disrupt supply chain for major European car makers that operate in Morocco. And now to Namibia, as NASA Energies become Namibia's third largest after takeover of 52 Shell and engine stations. Namibia's fuel market has a major new player as local company NASA Energies officially takes over 52 service stations across the country, becoming Namibia's third largest fuel retailer. The takeover was mandated by the Namibian Competition Commission to prevent any monopoly following Vivo Energy's attempt to acquire Engine Limited. Multiplicity of thought indicates all acquired Shell stations will be immediately rebranded to Nasan, while engine sites will transition later. Nasan Energies faces 5-year restriction from buying fuel from Vitol to ensure market independence, a condition they are challenging. In Nigeria, Aliko Dangote is having a positioning regarding the markets. are looking at global dominance of this market. Aliko Dangote is positioning its petroleum refinery to expand its crude processing flexibility from around 40 crude types to as many as 130 different crude grades. This expansion will double the refinery's output to 1.4 million barrels per day, transforming it into a global energy hub beyond Nigeria's domestic supply. Processing multiple crude grades will enhance the refinery's flexibility and competitiveness in international markets. The facility seeks to match top global refineries by adopting a merchant refining model, buying crude based on global price and availability. As sale on Dangote refinery, Dangote cuts diesel by 5.6% in refineries a tightened grip on Nigeria's fuel market. Africa's largest refinery has cut fuel prices again, strengthening its growing influence over Nigeria's energy market at a time when many African countries are still struggling with high fuel costs, currency pressures and stubborn inflation. Dangote Petroleum Refinery announced on Saturday that it had reduced the ex-depot price of petrol to approximately 81 cents, and that is 1,250 naira per litre, from 83 cents, which is 1,275 naira per litre, looking at diesel prices, which were cut by a more significant 5.6% to about $1.10, an equivalent of 1,700 naira per litre, from $1.16 at 1,800 naira. The latest reduction comes as global oil markets show signs of stabilizing following renewed diplomatic efforts between the United States and Iran, easing fears of disruption along the Strait of Hormuz, a critical route through which roughly a fifth of the world's oil supply passes. While the petrol reduction is modest, the diesel cut could have wider economic implications. The development could provide relief for businesses facing high transport, logistics and power costs. Meanwhile, cooking gas prices soared despite high domestic supply. The price of liquefied petroleum gas, cooking gas, has continued to rise across the country, Nigeria, despite a significant increase in domestic production and a decline in importation. Data obtained from the Nigerian Midstream and Downstream Petroleum Regulatory Authority has shown that local production from refineries and gas processing plants accounted for the bulk of Nigeria's LPG supply between April 2025 and April 2026, reducing the country's dependence on imports. However, the increased domestic supply has not translated into lower prices for consumers, with the cost of cooking gas rising to as high as 2,000 naira per kilogram in some parts of the country. According to the Nigerian Midstream and Downstream Petroleum Regulatory Authority's data, average daily domestic LPG supply range between 3,300 and 4,500 tons throughout the period under review. In March and April 2026, a local supply stood at 4,500 tons per day, accounting for the majority of national LPG availability. In contrast, imports by oil marketing companies declined considerably during the period. Imported volumes fell to 200 tons per day in March 2026 compared with 1,600 tons per day in November 2025 and 1,500 tons per day in December 2025. And now to the manufacturing sector of Nigeria. Nigeria's total foreign exchange utilization expanded by a massive 77% in 2025, climbing from $26.65 billion in 2024 to $47.17 billion over the 12-month period, driven largely by resurgence in non-agricultural sector. A Lagos-based finance and economic expert, Sola Adekambi, suggested that this aggressive expansion indicates a major rebound in activity like manufacturing and industrial retooling, which required heavier capital injection in 2025. He said an expanding forex coupled with a shrinking food bill is exactly what the economy needs to witness for sustainable long-term growth. It implies that liquidity is increasingly being directed towards productive capacity and industrial input rather than consumption. And on to food imports, as import drops by 7% according to Central Bank of Nigeria's data. Nigeria's food import bill decreased to $2.34 billion in 2025, marking a 7.37% decline from $2.53 billion recorded the previous year. According to financial analysts, this shift signals a critical transition in the nation's economic priorities. The drop in food-related foreign exchange demand suggests a moderation in import reliance, even as Nigeria continues to navigate food security challenges. Data from the Apex Bank revealed that food import consumed an average of $195.28 million monthly through 2025. While the first half of the year saw a low of $141.13 million in April, demand strengthened significantly in the latter half, peaking in September at $248.6 million. Meanwhile, the African Development Bank has revealed that 70.7% of firms in Nigeria own Oshe generators due to persistent electricity shortages, but power outages costing businesses about 3% of their annual sales. Big concerns there. The bank disclosed this in its 2026 African Economic Outlook report, which, among other items, assays Africa's fiscal policy and tax system. It warned that weak public service delivery continued to impose hidden financial burdens on households and businesses across the continent. The African Development Bank said the widespread use of generators reflected deep infrastructure and governance challenges that were weakening productivity, eroding profitability, and undermining confidence in taxation systems. According to the report, households and firms across Africa increasingly pay privately for services that government are expected to provide, including electricity, water, security, and logistics. A sale from Nigeria. The Nigerian National Petroleum Company Limited (NNPCL) has recorded a significant month-on-month surge in performance, with revenue climbing sharply to 4.97 trillion naira in April 2026 compared to 2.77 trillion naira posted in March. This represents an increase of about 79% in monthly revenue, according to the company's April 2026 operational and financial report released on Saturday. According to the report, a profit after tax also rose substantially to 481 billion naira in April, up from 276 billion naira in March, a jump of approximately 74%. Between January and April 2026, NNPC said it remitted a total of 3.71 trillion naira in statutory payment to the federal government. This is up from 2.89 trillion naira recorded for the first 3 months of the year. The report stated that crude oil and condensate production increased to 1.68 million barrels per day in April from 1.56 million barrels per day in March, indicating a marginal recovery in upstream output. Is the bulk of the ideals and the first phase of today's Business 360. We'll go on a quick break, and when we're back, it will be Global Economic Outlook, and one of our conversation would center on the Ebola centers amid recoveries and the impacts of Ebola economically around Africa. Don't go anywhere. Welcome back. It's your Business 360, and my name is Vladimir Kem. Up next is Global Economic Outlook. On Global Economic Outlook, one key perspective would be about the impact of Ebola economically around Africa. First, we're looking at World Health Organization chief visiting Ebola centers amid effort to stop the outbreak. A World Health Organization Director General Tedros urged early care for Ebola symptoms during a visit to a new treatment facility in eastern Congo as cases continue to rise across 3 provinces. Let's find out more on this.
Study, I think, so people can recover. Of course, we're working on vaccines and treatments, but that doesn't mean that people cannot recover from Ebola. So that's, I think, a strong message. And having a facility like this is to help people recover. That's it. Your courage gives hope. The key is to come forward as early as possible and to get the necessary support. Through that, you can recover. So we can stop this Ebola, and anyone who has it can also recover. But the rule of the game is this thing is everybody's business, and every citizen should be involved. You should believe that this is your issue. We have number of cases which is much higher than previous outbreaks before even it was detected. So that makes it complex. But not only that, there is displacement, there is conflict in this area that makes it complex. So I think the response we do should be strong enough to catch up.
Many concerns regarding the Ebola virus. Let's look at the economic impact of this disease. Ebola virus disease, known as EVD, has caused devastating economic impact that extend far beyond direct healthcare costs. The economic fallout is primarily driven by evasion behavior, a fear of contagion, rather than just the disease itself, a link to halted trade, border closures, a flight cancellation, and severe productivity losses. Macroeconomic and regional costs. Billions in lost GDP. Major outbreaks, notably 2024 to 2016 West African crisis across Guinea, Liberia, and Sierra Leone, an estimated $2.2 billion in combined gross domestic product (GDP). Regional losses. The broader West African region experienced cumulative losses ranging from $3.6 billion to over $32.6 billion due to cross-border trade restriction and drops in foreign direct investment. A total societal burden. Studies assessing the total long-term economic toll, including the loss of human life and survivor care, estimate the overall burden of major epidemic can reach up to $53 billion. Looking at key sector impacts: agriculture and food insecurity. Labor shortages caused by quarantines and curfews heavily impact farming. This leads to reduced crop yield, disrupted supply chains, and severe concerns regarding food security. From a business point of view, businesses face massive workforce reduction, and informal cross-border trade frequently grinds to a halt. Stigma and panic severely cripple the tourism, hospitality, and restaurant industry. From a fiscal devastation perspective, affected governments suffer dramatic revenue shortfalls due to slowing economic activity, forcing them to divert already scarce national budgets away from infrastructure and development towards outbreak containment. Healthcare and preparedness burden. Spikes in healthcare expenditures. Managing an Ebola outbreak requires extraordinary resources, including building specialized treatment centers and enforcing intensive infection controls, which divert funds from routine healthcare operations. And system strain. Routine healthcare utilization drops significantly as people avoid hospitals out of fear of infection, leading to increased mortality from other preventable disease. Big concern regarding the Ebola virus. As shown on Global Economic Outlook, Angola's economy expanded by 5.3% year-on-year in the first quarter of 2026, accelerating slightly from a downwardly revised 5.1% increase in the previous quarter. It was the strongest growth since the second quarter of 2024, driven by non-oil activities. The non-oil sector grew 6.2%, while the oil sector contracted by 0.2%. Notable growth was recorded in several sectors, including information and communication 27.6%, transportation 16.1%, fishing and aquaculture 8.7%, electricity 8.2%, and manufacturing 7.3%. By contrast, accommodation and food services negative 3.3%, and extraction and refining negative 0.2%, both contracted. And now let's go to the different market and see what the prices are in the market as copper gains on tightening supply. First, the markets. On market outlook, copper futures climbed above $6.4 per pound today, reaching their highest level in more than 2 weeks as tightening global supplies and robust demand expectation continued to support the markets. Chile, the world's largest copper producer, reported its weakest April output in 23 years, reinforcing concern about constrained global supply. Meanwhile, the newly appointed chairman of state-owned Mana, Codelco, indicated that the company will place greater emphasis on profitability rather than maximizing production volumes. And now quickly, let's go to the market on the demand side of it, as growing optimism surrounds the expansion of artificial intelligence technology and the rapid construction of data center infrastructure boosted the metal outlook. And now to the market. First, the metal market. Afterwards, we'll look at agricultural and energy market, and we'll transcend to the financial market, the metal market. A metal market begins with a price of gold at $4,506 per ounce, downward by 35 points. Silver price gaining just slightly, 1.02 point at $76 per ounce. A copper price at $6.49 per pound, gaining 2.2% appreciation, and steel price also gaining slightly. Quickly, let's look at the energy market this morning. Energy commodities begin with a price of US crude oil at $91 per barrel, upward by 3.687 point, and that is 4.22% appreciation. And Brent, which represents Nigeria's price benchmark at $94 per barrel, are gaining 3.38%. The agricultural market. Agricultural market indicates the price of soybeans at $1,192 per bushel, gaining 5.77 points, and wheat price gaining 4.58 point. Lumber dropping just slightly, and palm oil at 4,535 Malaysian ringgit per ton, downward by 2 points. Quickly, let's go to the financial market. The price of the Euro USD market, and next would be the price of the Naira and the crypto market. A Euro USD market price level standing at $1.16, equaling €1. The euro falling, but no significant change in the market. The pound gaining, no significant change, gaining over the US dollar at $1.34, no significant change in the market. Let's look at the state of the Naira. The US dollar against the Naira. The US dollar against the Naira price level stands at 1,371 Naira, equaling $1. The dollar falling just slightly against the Naira. The euro equally falling slightly against the Naira, negative 1.36 point decline for the euro against the Naira at 1,598 Naira, equaling €1. And the pound gaining slightly over the Naira at 1.48 point, 1,846 Naira, equaling £1. The cryptocurrency markets. But on the day's market, Bitcoin price, a price level standing at $72,880 for one Bitcoin. A Bitcoin dropping 707 points this morning. And the rest of the crypto market, Ether, Binance, Cardano, Solana, and Ripples, all on the decline. As we set to close, let's look at the stock market, the African stock market, and next the Nigerian stock market as we close. The African stock market, in case Nigeria's stock market, 25,567, 250,567 index points. A Nigerian stock market gaining this morning 181 basis points. South African stock falling, Egyptian stock gaining 3 points, and stocks in Kenya and Nairobi stock are gaining 22 points. As we close, let's look at the Nigerian stock market. The Nigerian stock market itself. A price of the Nigerian stock market, you've seen the indexes, but let's leave the indexes and talk about the stock market itself. A stock market component indicating MTN Nigeria at a price level 820 Naira per share. No significant change in the morning market. Boa Foods, no change in the morning market. Dangote Cement at 1,155 Naira per share, dropping 25 point, negative 2.12%. Boa Cement, a negative 3.62% decline. Saplat Energy also falling, a negative 3.17% decline. is the bulk of a conversation around the world of business and the economy and the markets. Thank you for being a part of it. We draw the curtain on today's Business 360. My name is Blyden Ukem, and thank you for watching.